Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday, a day in history, May 30th, 2024, 5:35 p.m., and ex-President Trump was found guilty on all 34 counts of his charges. So that is amazing in itself. If you really spend the amount of time and you look at it that the jury was probably deliberating a case, I am guessing 6 hours. You got to take time where they got to choose a foreman, how they're going to work it out. They're going to take their internal breaks for lunches. They might have a working lunch or dinner, but they're going to do that. How many hours they sitting there and talking? They're waiting for the judge to give other instructions. They're talking amongst themselves. And the winner of all this is Michael Cohen, as the president calls him, the MVP of liars, because you either believe the president's side or you believe that one main witness, Michael Cohen. So the market did that. Michael will write more books, make more money, and he got his vengeance on the president because that was what he admitted to. How will America react to it? Well, it's our first president that's ever been convicted like this, and there's more trials to come. Does this embolden the left? Does this kick President Trump up in the polls or take him down? Were the people that would say, hey, I'd never vote for the president if he's found guilty, did they think this was a fair trial in America? What's a fair trial? It's going to be appealed. That doesn't mean it'll win on appeal. And in theory, he could go to jail for 4 years. Can you imagine that? What jail would want him is the first problem. You got to take the Secret Service with it. How do you let him out in the general population? I mean, the problems are insane. But he angered this judge a heck of a lot. I mean, how many times did he get admonished? So you don't know. You know, a normal guy, a normal me, anybody that did that in a courtroom to the judge would have probably gone to jail for contempt of court. So this is an unusual situation. I don't know what was fair in this. I'm not a legal scholar. I've read both sides, and I'll let you decide for that. When we take a look at other things, the first thing we'll do is then I'm going to go to the big news, the bigger news, but it's not as big as that. The Memorial Day sale ends it's tonight or tomorrow. I don't know which part, but it's coming right at you. You got your final hours. 40% off any course or 1 year purchase. Pretty simple to do that. You go to iraepstein.com. You go under research for the courses, and you go underneath, you go under education for the courses. I might change that name to courses, to be honest. I think that it works better for everybody. And research for the research. Now in the research, it's my full research with my twice daily written updates, Monday through Thursday, and then an update on Friday, and then an update Sunday night, and special reports that I write and do videos. So it's a bit of everything with the different videos. 40% off, and just give you an idea of the pricing with this. If you took my enhanced Bollinger Band course, it's going to run you, it's $120 normally. It's going to be, $70 some odd dollars. If you take a 1 year subscription and you get 40% off, and let's assume the subscription's normally $150, you can see where you're coming in. That's what I'm getting at. How much is that when you break it down? It's 1 cup of Starbucks, a big drink with your tip, a month, to get all that research. That's how I look at it. What can people afford? All right. Let's go now to the next big thing, and that's the U.S. personal income spending and the PCE data. These are the numbers that you're going to be looking at. So this is this is what the market's looking for right now. So this just gives you all the numbers you've got. You also have at 8:45, and I've got it in 2 areas here, the Chicago Business Barometer, and the market's going to look at this in a big way, all right? Any way you look at it, if you hit these numbers, what the market has wrong, in my opinion, is inflation is still creeping up. Yes, the level of it is probably dropping, and that's what they're going to look at this, like year over year. Same thing on the PCE. PCE index may be down 1/10. They're looking at that as a possibility, but we'll get an idea as to what it does. What they're going to focus on in part is the spending. They want to see is the consumer weakening at all, and is their income holding up with the inflation. So there's different ways to look at this. It'll be reviewed heavily first thing in the morning. So turn your attention to it and be careful. Tonight is not the night I think you become a hero with all the markets. Now, what we've done is we have continued the break. Even after the market, I saw the Costco numbers were great. There was another company that came out also and beat, and they both went down. So the market's now not looking at things the way that it did. Could, I want to repeat the word in quotes, could this be the situation where it's the sell may go away? Well, one of the things that tells you that it is, and then what it isn't. What it is until you take out the new highs that we just made and we have retreated from rather dramatically, until those are taken out, it's in place. You never know when it's going to show up and when it won't work. Anybody that does, I wish you the best. But the idea is traders back away and they let the summer go by them, and then they turn their attention back to the market as they all return. That's the concept, and just accept that. Do I buy into it? I just present ideas to you here. I believe in one thing, the chart action. And when we take a look at the weekly chart closes, the market is down 1.4%, just off the all-time high closes. It's a close-only chart. When we take a look at the daily chart, we can see how the distribution, and we didn't know what this would be. Was it another leg up or not? Well, as it turns out now, we can argue that it's a top. And you can come back and you look at the tops over here and you can say, okay, if you drag that across, you have, I wouldn't call it a classic double top, but I'd say you've got zones there that are very close to each other. Most certainly, until the market takes out that high, I'm telling you, the bears are going to say that could have been it and we're on our way down. The bulls will argue, and I've already seen it, this is your last buying opportunity before the market takes off. Well, I'm a chartist. I take it a day at a time or a week at a time if I'm on a weekly chart. Right now, the pattern's lower highs, lower lows, which is bearish. To break that pattern, you've got to get this chart back over the 55.39 level. 53.39, I'm sure that's what it is. I'll just come there so you can see it. Yeah, 53.39 level. That would negate the downtrend. Wouldn't necessarily start an uptrend, but it would certainly negate the current downtrend. Next, this is the first move today and early tonight where you're under the 18-day average. If it were to just fall off really bad data tomorrow, bad data, hot inflation, that's the way to equate that. Well, maybe you're going back to 51.41 or the closest of a Bollinger Band, which is now closer to what? If you take a look at where you're at right there, 51.9, let's call it 51.98 to just round it, right under that part. So between, I'll call it 51.98 and 51.41, that's the next level of support. Momentum in the chart is pointing down and not oversold, so we can pick up a little more momentum here as well. When we take a look at the NASDAQ, I look to see where we're at, and again, I have that argument, not quite as good as the S&P. You made the higher highs, but it should have. This has got NVIDIA in it. Nothing's like NVIDIA, all right? So it carried up, but it too now has the pattern of lower highs, lower lows. And what it's holding is the 18-day average, that line in the sand. If the market extends down, there's big support waiting at the 18,094 to 1888 level. The market has lost its embedded reading, but the goal when it lost it was to get right where it's at, the 18-day average, which it's hit. When we look at the Dow, it's been straight down. So this market has just come from the 40,200 level to now 38,164. It's a 2,000-point break almost in the market. I mean, it's monstrous. And if you notice, every single day has had a lower low. It's been relentless. So this is one of those vertical price drops that was predicted. If you take my charting course in enhanced Bollinger Bands, right here, this is where this chart came unglued next day, right here. So it hit one target, the next target is 39,005. And if you close there, just what I'm saying to you. Maybe you can get down to wherever the Bollinger Band is. And you did that on Wednesday, and you're pushing on the Bollinger Band right here. Are you getting overdone? Well, momentum says you are. That doesn't mean you can't go lower, but selling under a Bollinger Band, you only stay under them 5% of the time, so be careful. In the Russell, sort of the same thing. You lost the embedded reading. The market came back. You never did get up and challenge the old highs, and that's because interest rates are the enemy of this market. You have heard forever, don't worry about it. You pick your stocks within it, and they're going to do fine. Well, it's like anything else. Individual stock picking is a different game than index picking. But when you go to the index picking, this is not the place to be if interest rates are staying higher for longer. It's the one to avoid. The Dow didn't do so well either, as you can see. Salesforce today is the big 20% drop in it that hurt the Dow. That's one of the things that hurt it yesterday and today. When we look at the 10-year note, lower highs, lower lows, getting beat up as it came down. But this was the zone that I mentioned to you yesterday that I thought the pros were covering shorts, and they are. Why would they be pressing here? You want to see the PCE. You're against the Bollinger Band. You only stay under it 5% of the time, and you're oversold. And the same thing is identical true in the 5-year notes. So this is a good time where you do this with your hands. I don't want to play that. I'm going to stand back and see just what the market's going to offer me. And that, to me, is the right mentality in this market. The dollar has stalled out at the 18-day average of closes, not going anywhere right now. Eurocurrency, it's going to wait to see what's going on here. And now we have next week, the European Central Bank widely expected to cut interest rates by 25 basis points. Momentum pointing down, not a trend in the market. You have a higher high, lower low, and the battleground's pretty clear. It's been the 200-day average in the gray. The green is the 100. At first, it hit both the Bollinger Band and then it just stopped, and it came down there. This is another place not to be. There's plenty of that going on right now. And then there's all of a sudden you want to be in the markets. That's how it works. Look at how the British pound, it's fighting to be okay. It's not doing a real good job of it tonight. It did today. The market held on, didn't lose the embedded reading, but when it got up today, I was telling my clients, because I had them buy the break yesterday, and I said, I know it's not a big profit, but you're fighting here, and we got the PCE. Cut your positions down by 50% or be out. Your decision on if you want to do that. And, if you lose the embedded reading, you're probably going back in here to the 126.40 area. That's what you got to consider. Do you have to be a hero with every trade? Do you have to milk everything out of it? No. If it holds up and goes, it's probably going back to 128.33. But you're at a real difficult spot in the market right here. In Bitcoin, sideways action, the market fighting a battle right now. And I've gone to the June contract, as you could see. You've got lower highs and higher lows. I hate that pattern. The bias is up, but you're really not going anywhere right here. Then we get to the differential of what is the Brent and WTI oil doing, and it bounced for a while and all of a sudden let go again. And as you look at this, how the market's pulling into everything, you're coming back in to see just how much real support you have at the 100-day, the 200-day, and the Bollinger Band. You had one great short covering rally, and you may not believe in Bollinger Bands the way that I do or use them the way I do, but I think once you take my course and get a feel for it, you'll understand my thinking. At least you see another train of thought with it. Same thing in WTI crude. And I don't see a trend here. I see whipsaws back and forth right now. Gasoline, President Biden. Release that gasoline, keep those prices down, and kaboom. This is the lowest you've been in gasoline now since March. So you're not getting at the pump. This takes days to get back to the pump, but this does translate over time. In natural gas, I'm looking for the pullback. I told you I think the market's going to be a buy again. I have not changed my opinion. Long term, I'm friendly. Short term, market's got no trend. Look, it's got higher high, so there's no trend here. It fought a battle. at the 200-day average up to the Bollinger Band, and then failed back. That's really what went on. So you put this all together, you try to come up with game plans, and that's what I try to do with you each and every morning, because at 6 in the morning, I'm talking the futures markets. That's Central Time. We look at the daily and the weekly charts. On the weekend, we look at weekly charts and daily charts. I flip the whole sequence around. And I do that in spiders, ETFs, the stock market. So if you're interested in seeing that and how the trades come out, and it's all chart-based, IraEpstein.com, go to the word research for the courses, and I think you'll love them for what they are. Go to the word education on the website. Remember, you can move up there. I'll catch you in the morning as we talk about the reaction to the PCE. You take care.